Warning! Warning for all you crypto investors. The crypto markets are highly volatile. I get asked this all the time about crypto, and it was funny when crypto markets were really high, when Bitcoin was up around 40 to 60,000, everybody was an expert. The value of their cryptocurrencies were super high, but then all of a sudden, let's fast forward to now. What happened? It plummeted, right? Got down to a low of, if I'm not mistaken, around 12 to 13,000. Now we're sitting around 21,000. Where today, January 17th, 2023, crypto's at about $21,000. So the crypto markets are really volatile. They're highly correlated to the US stock market. So a lot of people said, oh, crypto's not correlated. It's not going to move with the market. To me, one of the most correlated asset classes I think I've ever seen. And it's been even more volatile than the stock market. The value of cryptocurrencies can fluctuate significantly over short periods of time. One day it's 30,000, the next day it's 20. That can happen over a short time. That can wipe you out. This volatility can lead to significant losses for investors. And if the value of their holdings decrease and gets down to a certain level, most people sell. They get nervous, they get scared, they sell. And then your losses are real. So the other thing that's interesting is up to this point, crypto assets, well, they're not really that regulated. It's changing, but cryptocurrencies are not regulated in the same way as traditional financial assets. This can make it harder for investors to protect their assets, harder for them to get information, and harder for them to really understand exactly what it is that they're investing in. And that can increase the risk and also the fraud, as we've seen, FTX and all sorts of other ones, people losing their crypto accounts just overnight, boom, gone. Or other crypto accounts that you had money in, just freezing all of your assets. You can call it whatever you want, but I call it risky business. So, do you want to really protect yourself? Well, here's the thing. If you're going to get into crypto assets, then you got to really learn how they operate, what they do, and understand them. So the other problem with crypto assets is they're not widely accepted. Some people love them, other people hate them, other people don't even want anything to do with them. Cryptocurrencies are not yet widely accepted as a form of payment. So, I loved it when crypto was the talk of the town and everybody was putting money in crypto. Okay, can you buy a car with crypto? Sure, maybe for a short while, Tesla was allowing you to buy a car. But could you buy your season tickets to the ball game? Well, I think they were playing around with that, but that didn't go away. But let's talk about things you need to live, not ball games. Could you go out and buy groceries with your Bitcoin or Ethereum? Not yet. You see, it's not a means of exchange, which means it's not accepted as a form of payment. So it's going to be very difficult for you to use crypto to make the purchases that you need to live and operate in this society. So this is going to limit the practical usefulness of cryptocurrencies. And it's going to limit the usefulness of them even as an investment. I think they fall more into the investment category than they do in the currency category or than they do in the exchange category because you can't really exchange them for anything. So it's really just an investment. But it's an investment that has no intrinsic value. There's no fundamentals behind it. There's no assets behind it. There's no real business behind it. I know FTX tried that, but that didn't work out so well. The fourth thing I want to point out is crypto assets are not FDIC insured. Not that I really put a whole bunch of weight on FDIC, but traditional bank deposits, well, those are FDIC guaranteed, and that gives people a little bit of comfort knowing that up to $250,000, there's some type of a backing, some type of an insurance that supposedly will make them whole if the bank goes insolvent. Cryptocurrencies aren't insured by the FDIC or any other government agency. So if you owned FTT, which was FTX's coin, you probably have zero recourse. Your money's gone. There's no backing. Your money's held there, the crypto coins, all those different things that you were investing in, that money could all just go away tomorrow. And that's something you really need to consider because investors could lose all of their money. If the value of their holdings decrease, if the company goes insolvent, if the money gets frozen, if there's crimes, fraud, Ponzi schemes, all these things are happening right now. But you know what? Just a short while ago in 2022, oh my God, Bitcoin and crypto, that was the future. There was millionaires being made. They were buying Lamborghinis and Ferraris and Porsches. And now those Lamborghinis, Ferraris, and Porsches, well, they're probably going to get repoed. I'm just telling you the truth. The other thing that really strikes me as crazy about crypto is most people that invested in crypto have no idea what they were investing in. They didn't know it. They didn't like it really. And they definitely didn't understand it. They were just doing it based on investor confidence, based on emotions. This is totally an emotional based sale. No ifs, ands, or buts about it. And the fifth thing I like to point out is crypto scams are common. There's been many instances of crypto-related scams, including Ponzi schemes, fake ICOs, phishing attacks. So it's really important for investors to be vigilant and to be careful about researching any investment opportunity before committing the funds. And I don't think a lot of people did that when it came to the crypto world. So let's go back and let's just recap some of the things we just talked about, because we hit really on a couple key points. Number one, crypto markets are highly volatile. The values are going to go up, down. It's going to be highly volatile. So get ready, hang on, buckle in, because it's going to be a bumpy ride. Number two, crypto assets, they're not regulated. It's kind of like the wild, wild west. It's going to get regulated here pretty quick, but right now, as you can see, there's a lot of hanky-panky going on. Number three, crypto assets, they're not widely accepted. You can't go buy your bread and your milk and your eggs with it. So it's really just a store of wealth. And how's that working out for you right now? Number four, crypto assets, they're not guaranteed or insured or anything else like that. Even those coins that a lot of people, let me reframe something, because I heard this numerous times. They were saying that there was these coins that were guaranteed. No, they're not. Guaranteed by who? There's nothing behind them. The fifth thing, crypto scams have been very common lately. There's been Ponzi schemes. There's been fake ICOs. There's been phishing attacks. People have lost all of their money, not for anything that they did wrong, literally like the money just got frozen and there's no way to get it back. You need to understand these things before committing your funds. Be smart. I always say it, protect your assets. It's the third law of wealth. Protect your assets by knowing, liking, and most importantly, understanding the things that you invest in. Do you really understand crypto? Do you really understand Bitcoin? Have you read the books? Have you fully grasped the whole concept and what the future of it could be? And if you say yes, giddy up and go. But how about all those other coins, the meme coins and the meme cryptos, whatever you want to call them? Did you really understand those? What Shiba Inu? Did you understand what that was? Probably not. So folks, I'm not saying the crypto world is completely bad. It can be really good. There's going to be a lot of millionaires made in it. We'll see so in the future. But there's probably going to be a digital currency that the government puts in place. Or maybe it's the Fed or the government or both. Who knows? But these are all things you need to consider. What would that do to impact your Bitcoin, your Ethereum, or any of the other things that you own in the crypto space? You really got to look at the risks, because there's a lot of them. And you know what? When you peek below the surface, there's not much there. Warren Buffett, Munger, they want nothing to do with it, because they're fundamental investors, and there are no fundamentals when it comes to crypto. So folks, if you like this video, dive in, do your research, read some books about Bitcoin, get yourself a good Bitcoin coach, and there are good ones out there that can tell you what this environment looks like, what this investment actually is, and what it potentially could be for you. And the other thing I always tell people, if you're going to invest in an asset like this, in an investment like crypto, invest with money that you could lose tomorrow, and it wouldn't change your life. Don't go all in on this. Look at your portfolio. Carve out a small little sliver for this. And that's all you should do. Hey, if you like this video, check this one out. Economic Collapse, My Survival Plan. That's an important one, and you should check it out. We'll see you on the next one. Thanks for joining me.